Welcome back. You're still tuned into Trading Hour. Now, recently listed Gandhar Oil Refinery is the next company on our radar. Remember, the stock listed just shy of 300 rupees a piece, which is a 76% premium to its issue price. It was a very solid listing. In fact, even now it's holding up at the 290 at 292 kind of levels, even though today, it's down around 6%. So it's held up quite well. Now, the reason we're talking to the company is because they have released their Q2 earnings. It is a bit weak this time. There's been a decline in the revenue and the profits as well. But to discuss a little bit more, to get a broader sense of how the entire year could look, we're joined by the management. Aslesh Parekh, Joint Managing Director at Gandhar Oil Refinery, joins us now. Aslesh, thanks a lot for joining us today. This is Pavitra. Now, I just want to begin by asking you on what overall demand is looking like. I know this quarter has been a bit, muted. But take us through what you expect for the full year. And in the previous year, you had managed, I think, around 4,100 crores in terms of revenue. Do you think you'll be able to surpass that this time?
See, first of all, thank you for inviting me to this interview. Obviously, yes, it has been a challenging environment across. Even then, we managed a volume growth of around 6%. Manufacturing volume growth of around 6%, primarily focused on the personal care healthcare division. So, although the revenue has been flat because revenue is a component of the raw material pricing, but volume has grown from 113,000 kil to 120,000 kiloliters in this half.
So what is your volume growth outlook for the rest of the year, Aslesh? And part two of my question is, I'd like to know your margins were down around 30 basis points sequentially. What is the reason behind that? And what is your outlook on the gross margins as well going forward?
Yeah. So we anticipate to grow at 10 to 12% volume growth year on year. Obviously, quarter 3 and quarter 4 are better performing years historically also for Gandhar. So we anticipate, to ensure the run rate is speeded up, in the next coming 2 quarters. And coming back to gross margin, the company, has been in position to maintain the gross margin of 10,000 rupees per kiloliter to 11,000 rupees per kiloliter. That is the broader outlook in terms of the gross margins of the company.
Okay, got that. I also want to talk about your exports because it's quite a big chunk of your revenue, right? More than half. So take us through what's going on on that front. And is the margin different for the exports?
See, we witnessed a strong growth in the export region, specifically in North America, South America region, also in Asia Pacific. To give you a rough number, our export revenue contributed to around 57% of the total revenue of the company, vis-a-vis the domestic sales part of it. And the profit margin in terms of exports and domestic are more or less similar, but export continue to witness strong growth.
So do you expect that the exports will contribute even more in the coming few years? Right now, you're saying it's at 57%, right? Is there
yes.
Any effort to sort of increase this since this part is growing well?
Yes, the idea is, to focus on existing customers, not only in India, but globally as well. With the multinational customers that we have in our personal care healthcare division, we anticipate, to increase the wallet share with our existing customers and also embark on a new journey with our new customers as well.
Do you have an export target for the next couple of years, Aslesh? Now it's 57%. Do you plan on increasing it to 60-65%, say by FY25?
The endeavor is, to have a proper growth in terms of volume. Obviously, it will be a combination of domestic sales and overseas sale. The idea is, to maintain it 55-60%, in the coming quarters.
Okay, got that. Something else which stands out is that while your revenue and EBITDA, if I look at the compounded growth, it has been around 40 to 50% in the last 3 years, but the profit hasn't really kept up. It's just at around 20%. Can you explain why that's happening?
See, we want to focus on the personal care healthcare division. Over last 3 years, company has, ensured, new approvals from some of the marquee customers very recently. So the volumes from these specific customers are expected to grow up, in the near future. Apart from that, we also intend to increase our wallet share with our existing customers by, giving them new products and also grow with these customers.
No, I got that. I'm asking you, why has the profit not been able to keep up? Because I'm looking at a longish period, right? Around 3-4 years. It's sort of been the trend. And what can we expect in terms of the profit growth as well from here on?
See, we anticipate, to have a profit margin. So, for example, if you see in this quarter, our profit after tax was around 58. Profit after tax was 48 crores compared to 54 crores in the previous quarter. We anticipate, to ensure the profit are in the range of 4 to 5%, 5 to 5.5% in the coming quarters as well.
Aslesh, your net working capital days have increased. They were 46 days earlier. They have now increased to 58 days. This is sequentially, and this was largely led by an increase in your debtor days. Now, what is the current receivable picture looking like, and what is your outlook on the working capital going forward?
See, if you see, there has not been a huge increase, in the working capital days. It is increased from 47 days to 58 days. Yes, but if you see our debtor days, our debtor days has increased from 59 days to 67 days, which is a very marginal increase in the debtor days. But our team is consistently in touch with the customers to ensure debtor realizations are on time, and we continue to maintain healthy inventory levels to ensure any volatility in the raw material pricing are kept at the very minimum levels.
All right, Aslesh, we leave it at that. Thank you so much for joining in, and we wish you good luck for the second half of the year. That is the management of Gandhar Oil Refineries. The stock not doing very well today, down 5.5%, slightly off the day's low, but still at 293. Now it's slightly below its listing price. It was 298, but still substantially higher from its IPO price of 169. It's time for a short break here on Trading Hour. We'll get you more on the markets and stocks on the other side. Stay tuned. We'll be right back.